For a decade, we've been told a story about robotaxis, that this was going to be the future of transportation. That Tesla is going to own the autonomy market, that this car right here is going to make Tesla the most valuable company in the world. We know today that's simply not true. Tesla is not a leader in autonomy. They are not a leading auto manufacturer. They're not a leading ride-hailing company. There is nothing to tell us that Tesla is going to lead in autonomy in the future. And this week, we've got to look at another vehicle that is going to be in the market likely before Tesla, driving fully autonomously. That is a Lucid vehicle powered by Neuro with NVIDIA chips inside, driving on the Uber network. This is the future of autonomy. This is how investors should be looking at the space. This isn't a winner-take-all market. This is a market where there's going to be dozens of players in autonomy. There are going to be a dozen or more auto manufacturers that are going to make level 4, level 5 vehicles. They are going to be on the road as early as this year. This shouldn't be surprising for anybody who's watched Asymmetric Investing, because this has been my theory since 2024. That's when I started buying shares of Uber and Lyft and Mobileye. Yes, the company who has a partnership with Volkswagen, the number 2 automaker in the world, and another new partnership with a large US manufacturer. That's either General Motors or Ford if we're reading between the lines. Autonomy is going to play out in a very similar dynamic to the way that ride sharing did. The value is going to be captured by the companies that we choose to interact with as riders. What app do you click on when you need a ride? What app do you click on when you want something delivered to your house? What app do you click on when you want to order something? Uber, Lyft, DoorDash, Amazon. These are the companies that are going to be the gateway to autonomy. This is going to be the way that we access autonomy. On the supply side, automakers are going to do what automakers have always done. They're going to make automobiles. The technology may be developed by them, it may be developed by somebody else, but this is going to be a commodity manufacturing business. The differentiation in automaking is going to be the same thing that it's always been. Are you efficient? Do you have pricing power? But when you call for a vehicle on Uber, you're probably not going to make a choice in the future. Are you going to get into a Tesla vehicle, a Volkswagen vehicle, a General Motors vehicle? You're just calling for an autonomous vehicle and saying maybe there's one person riding, there's 5 people riding, I have bags, I don't have bags. Maybe I have a dog, I have a child. We have seen the future of autonomy, and it's not Tesla. It's the companies that I'm investing in on Asymmetric Investing. My name is Travis William. Thanks for watching Asymmetric Investing. If you want more from me, check out my newsletter. There's a link on the screen and a link in the show notes. That's where I'm following all of the trends in autonomy. It's where I'm putting my money where my mouth is, buying stocks once a month. And you can follow that asymmetric portfolio on the newsletter there. But let's dive into what we learned this week, because Uber is not a new player in autonomy. Lucid and Neuro, not new players in autonomy. We knew that this partnership was coming, but this is what we found out this week. These 3 are working together to make a vehicle. So this is going to be based on the Gravity SUV from Lucid. Neuro is going to be providing the autonomous vehicle platform. The way to think about this is the software layer. So let's say that this is a phenomenally successful partnership. Neuro is going to go out and try to sell themselves to other manufacturers. They are a modular company. So yes, they want to work with Lucid. They want this partnership to be successful, but then they're going to want to go out and say, where else can we get volume? Can we work with General Motors, Ford, Toyota, Honda? There's lots of OEMs who are trying to figure out their autonomous vehicle strategy and plugging into a partner like this, like they did with Mobileye with base ADAS. That's going to be something that they're looking to do. That's their business model. Uber now is the ride-sharing network. So everything from moving people around to moving goods around. Uber is going to be owning and operating the fleet. Okay, so this is going to be interesting. They're actually, at least as of right now, it looks like they're going to be buying the vehicles, owning them, and then maintaining the vehicles. This is often a question of who's going to actually own the vehicles, who's going to maintain the vehicles. Lyft is building out their network a little bit differently. They're saying, hey, we'll help service these, but we're going to have companies like Mobileye who are actually going to own the vehicles. They will be the fleet owners. Lucid is going to provide 20,000 or more vehicles in the US and international markets, and the hardware and production is going to be integrated. This is going to be the big change over the next 5 years. We're going to go from taking a standard vehicle and putting a whole bunch of stuff on it to actually integrating all of this technology within manufacturing. Rivian is one of the first ones to announce this, with their radar and LiDAR actually built into the vehicle, but we're going to see more and more of that in the future. Waymo has actually built a vehicle with Zeekr that we've seen some of those advancements, but that's going to be the future, is these autonomous vehicles, these robotaxis, if you will, looking very similar to normal vehicles, but just having the technology kind of hidden in their roofs, hidden in the corners of vehicles, and even taking out things that we don't necessarily need if you don't have a passenger vehicle. And this is going to be launching in 2026. So this isn't some future thing that's happening. This is happening today. I want you to contrast that with what's happening at Tesla. Tesla has been saying that they were going to launch the Robotaxi for years now. Yes, they have a test fleet in Austin, Texas. They're also testing in California, but we still have safety drivers. They're starting to pull those safety drivers, but these are still in a geofenced area. They're operating in a very similar way to the way you see a Waymo operating, teleoperators, all of that kind of stuff. But it's very clear that they're not ahead of the competition. And there's more competition coming to the market than just Lucid, Neuro, and Uber. This is Moya. This is a Volkswagen subsidiary. They're using Mobileye's technology. So Mobileye just announced a partnership with a new US auto manufacturer. That's why their stock is going kind of crazy early in 2026. But this is the Volkswagen ID Buzz. There are over 100 of these already operating. And they said in a presentation earlier this week at CES that Moya is going to have 100,000 vehicles. I believe it was by 2033. So 7 years from now. That seems like a long time frame. But remember, Elon Musk said 10 years ago that you were going to be able to drive fully autonomously from LA to New York. That still has not happened without a safety driver anyways. But this vehicle is going to have 13 cameras, 9 LiDAR, and 5 radar. At least this is what was announced when this partnership was announced in the middle of 2025. And again, these products are getting to market. From everything we know right now, there's a partnership where these vehicles may be on the Uber network, but it's also going to be built in a flexible way so that they can access any ride-sharing network. Mobileye vehicles have said they're going to be Lyft ready. So again, the question is going to be, where is the demand for rides? Is it going to be on Uber? Is it going to be on Lyft? Is it going to be DoorDash? Is it going to be the Tesla app? Is it going to be Waymo? I think the clear answer here is that scale really matters if you're aggregating demand. Uber and Lyft are going to be the companies that we're going to naturally go to for ride sharing. It's where we go for human drives today. It's where we're going to go in the future for autonomous rides. What will be new is that it's not going to be a random person driving your vehicle. You're going to be able to pick the features that you want in a vehicle. For example, Tesla thinks that a vehicle with just 2 seats is the way to go. Moya has gone the opposite direction, saying, you know what, we've got at least 4 seats and we have room for your luggage. Neuro thinks that its Neuro driver is going to be able to drive everything from small vehicles all the way up to semi-trucks. So you add all of these announcements together, and I think this is the clear takeaway for investors today. There is not going to be a winner-take-all market. Tesla is not going to own autonomy in the future the way that a lot of people thought they were just a few years ago. This is going to be a market where there's a lot of different suppliers, where the product you build, the cost structure you have really is going to matter. Are you able to be a profitable auto manufacturer? That's going to translate really well to being a profitable autonomous vehicle manufacturer. The next layer is the technology layer. Who's providing the chips and the software? Some of that's being done internally. Some of it's being done by companies like Neuro, like Mobileye, even like NVIDIA. So there's going to be that technology layer that is going to be an opportunity for investors. I'm invested in Mobileye. I think that's the one company that has a natural path from base ADAS, which is in vehicles today, to the full level 4 autonomy that we're going to have in the future. Those vehicles already on the road, already being tested with Volkswagen. And reading between the lines, it looks like they won a partnership with General Motors, who in 2025 announced that they were working with NVIDIA and was absent from the announcement of NVIDIA's level 4 partners at CES this week. Then you get to the demand source and the fleet management. That's going to be companies like Uber, Lyft, DoorDash. I think those companies continue to be leaders, whether you're going to the app themselves or whether they're white labeled like sometimes DoorDash is. I own shares of Uber and Lyft because I think those are really good values from investments. Lyft trades for just 1.1 times sales. Uber is about 3 times that from a price to sales perspective, but it's a much bigger network, more diversified business model, both geographically, and they have that delivery service. And they're not just focused on ride sharing, they also have delivery and even a freight business. DoorDash is one I think could have a bright future. I haven't bought yet just because I haven't liked the price in DoorDash, but as that's been coming down, they've become a little bit more compelling too. But with all of these announcements, especially at CES this year, we are not going to see autonomy be a winner-take-all market. We are going to see this be a very modular market. What are you specializing in? What do you do better than anybody else? And what do customers choose to interact with? On the internet, that is the point of differentiation. This happens over and over again. My money is on Mobileye. Lyft, and Uber. Who do you think has the brightest future in autonomy? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing, both here and my newsletter. Like I said, link on the screen and a link in the show notes if you want to see my market beating portfolio. Thanks for watching, everybody. We'll see you here next time.